you can see I'm quite an old bloke. And in 1994, I was asked to give a speech at the beginning of the internet, the commercialization of the internet. I was asked to give a speech to all the UK partners of Ernst and Young, and I called that speech "The Adventures of a New Frontiersman in the Colonization of Cyberspace." So I thought I would update that a little bit 30 years later and call this "The Learnings from the Adventures of a Dinosaur in the Colonization of Cyberspace." So I know that Ollie asked me to talk a little bit about me and my background, um, which I'll do. Then I'll talk. I was going to talk for 10 minutes about really investment readiness and some of the lessons I've learned over the decades around that. I thought I'd then talk a little bit about diligentia, but in the form of doing a pitch as a demonstration of what I'm talking about in terms of investment readiness, and then we could have 10 minutes of conversations. So a little bit on me. I'm an accountant originally, qualified with Ernst and Young. I was the CFO of a number of listed businesses, not a very good one, I have to say. But I was lucky enough to become the group finance director of a number of listed businesses at the age of 27. And I had to go around the city pitching for funding to fund managers, pension fund managers. And I learned very quickly that I had 20 minutes to give a pitch to them. And they really didn't care terribly much about what your business was. In our case, we were a property services business, but I knew that after me, there might be a cement manufacturer or chemicals business or a car dealership. And what those fund managers cared about was making money. They weren't that interested in what my business was. And that was a really good early lesson. I'm going to come back to that in a minute. I've really been a serial entrepreneur. I got involved in the world's second virtual reality business in 1992, which we floated. And I saw the internet coming, and I set up one of the UK's first internet businesses in 1994, where we did the first online credit card transactions in the UK with NatWest, which was the boring bit, and we streamed Madonna, which was the much more interesting bit. Didn't work very well. And we were too early. That business, I've had lots of failures as well as some successes in my career. We were too early and we closed it down. But in 1997, when eBay was 6 people on the West Coast with a website that sold Beanie Babies, I was offered the UK or European rights to eBay, and I'm the man who turned that down. So it's not so great. I then got approached by Jeff Bezos to run the international operations of Amazon, and was interviewed by all his team. And in the end, I didn't get the job, but I went to a business called GeoCities, which was a big community business, and ran their international operations. And in the end, we sold that to Yahoo I initiated the sale of that to Yahoo for about 4.3 billion, although I wasn't there long enough to collect a vast amount. And then I saw the internet coming to the UK, and there was nothing for UK institutions to invest in. So I set up a computer games business in 1999, which grew very rapidly from 2 people in this room to 750 people in 10 countries. We acquired 14 businesses in 12 months. And we did lots of diligence there. I was also involved with some friends in floating a music venue business linked to a record label. And in 2005, I took we had some IP that my current CTO had, and we set up an IP litigation business, suing some fairly large companies in the States, until eventually we were knocked out by the US courts. I've been a non-executive director and on listed boards for 30 years, non-executive chairman, and then an angel investor. So I've done lots from both sides. I've been involved in software services, IP, B2B, B2C, lots of failures. And now you probably learn more from your failures than you do your successes. So, what have I learned from all of that over the decades? Um, the first is that the base layer of what we all do, you all do, is in running these businesses, we're passionate about what we do, and we're trying to prove something about a vision that we have for our businesses. And that requires resilience, passion. In fact, the experience is that whatever your business is, it will tend to take 3 times as long and cost 3 times as much as you thought at the beginning. And if it fails, it will likely be for a reason that was pointed out to you at the beginning and which you ignored. So some advice there is be brutal in self-assessment, uh, because in the end you will be found out, and it's pretty frustrating if you put 5 years of your life into something and you then find that it failed because somebody told you that 5 years ago and you didn't want to listen. The next truism: most businesses looking for funding will not get funding. Most angel investors lose most of their money on most of their investments. Most VC funds do not raise a second fund. And that in the UK is a massive misallocation of capital. It's really inefficient and frustrating for everybody involved. And in fact, that's why I set up Diligencia, to try to address that inefficiency and make life easier at the smaller end of our market. The next bit of advice: when you're looking at your business and if you're looking for investment, put yourself in the position of the investor. What would you be looking for? Why should your business be funded by him or her rather than the other 50 others? How do you protect the downside? Because those are the first things that the investors really care about. Next thing: why do you really need the money? Is it actually because you don't have any? In which case, that's not a great reason for an investor to invest. Um, if you don't have money but you've got an idea, you have to start with friends and family. If you don't have a product or service built, if you're embarrassed about asking your friends and family, then in fact you shouldn't be expecting a third party to take that burden. Maybe it's because you don't have any customers yet. Um, well, that's not a great sign that I should invest in your business. In the end, you've got to prove to me that people want your product. Another thing is that perhaps because your customers won't fund you, and that's particularly on large capital projects. It's no good asking if you've got a big idea that requires quite a lot of capital. There must be customers at the end of it, being a B2B world, and they, in theory, should help you fund it if your idea is such a great idea. And the other one is because your business model might not generate profits. And a couple of other thoughts: if you're a business that makes and sells things, you've essentially got an engine. You've got inputs, you've got the engine, and you've got outputs. And what an investor wants to see is that engine working, and want to see that for given inputs, these are going to you've got a process and a set of levers that generate the outputs, and that the money that I, as the investor, are going to give you are simply to speed up the throughput of that engine. So you've got to think of your business as an engine. If the businesses sell services, um, then you've got to think about defensibility, and in particular now AI and scalability. Uh, okay, so how can you give yourselves an edge uh, in getting investment and being investment ready? I think there are 5 rules. So the first rule is what I call the granny rule. So don't educate me in detail on the intricacies of your business. You can do that later. You can't explain your business to me um, in great detail in a few minutes. And I'm not really interested in your business unless you're going to show me how you're going to make money. But you have to simplify your story. And far too many pitch events you go and people are trying to educate you in a couple of minutes on what their business actually does. If you're an investor, you don't really care. What you care about is your next rule, the make you rich rule. So that's what the investor cares about. The investor wants you to explain how you're going to make money for them. So you don't need to talk about massive market. In my view, you don't need to talk about massive market or the fact you're going to be the next unicorn. Um, because the first step you've got to get to is getting to a place where you can give the investor his money, just just cover the return of the money he's lent you. Because in the end, all equity is a loan. So you need to start by explaining how you're going to return that base investment. Third rule, the 10 times better rule. If you're selling something into an existing market, it's no good being twice as good as the competition. You've got to be 10 times better because inertia and switch costs just cause people not to switch to something that's slightly better. So you have to show that your stuff is so much better, you're going to be able to dislodge the incumbent competition. Fourth rule, the why now rule. Why is your business the right business in its market um, at this particular point in time? Getting timing is so important on investment because investors tend to be sheep. Investment tends to go in waves. You've got to catch the wave right. And the fifth one is the why us rule. Why, if I'm the investor, should I invest in you? Why is your company going to be the company that is successful in this, whatever this space is? And why are you going to win? And in the end, that is really down to traction. You've got to show traction. So uh, that's those are the five rules: the granny rule, the make you rich rule, the 10 times better rule, the why now rule, and the why us rule. And if you take those rules, look in a mirror and apply your those rules to your business, I think you might come up with some fairly startling revelations and thinking about how you simplify the messages to what you do. And I thought we would try that out. And in the end, you can tell me whether you think I am persuasive if we try those five rules out on diligentia. So let's see whether I can give you an angel pitch on diligentia itself. Um, let's start with the granny rule. So, what is diligentia? Um, Diligentia is a low-cost platform with lots of AI that helps companies like yours get yourselves organized to raise money from investors or turbo boost your growth or sell your company for more money. We help people like you make more money for yourselves and your investors more quickly with more certainty. That's all you need to know to start. Secondly, the make you rich rule. If you're going to invest in my business, why? Well, if you invest in us under SEIS to boost our existing demonstrable traction, we will be profitable by the end of 2026 on the services we currently offer. Our team has taken businesses from startup to IPO and exit, the largest is 600 million. And we built our business out of the pain of the problems we're now solving. We understand the market we're serving. We plan to exit within 4 years to an AI laggard that needs to buy catch up. So join our other investors who are hard-bitten accountants who are already customers on the platform, and they started as customers before investing. So there's some proof points there. The 10 times better rule. Automation enables diligentia to deliver services for pennies that 10 years ago, you, my customers, would have paid thousands for. A typical professional costs around £1,000 to £1,500 a day. With Diligency, we give you a lot of that value for free. Then you can upgrade for only £100 per year for Light or £1,000 a year for Pro. And we can still connect you with those advisors who can deliver their services more efficiently and the investors that you're looking to attract. And we don't charge a percentage of the fundraise. So you save vast amounts of money. That's the 10 times rule, 10 times better rule. Why now? AI is turning the provision of high margin professional services upside down, and that presents an opportunity for challengers like us. Now, against all of that, why Diligencia? Why is Diligencia going to win? Well, firstly, we've got first mover advantage. We started early and well positioned to catch the AI wave. The platform's already built. It took 3 years. It's broad, it's deep, and it's difficult to replicate. Traction. Traction is critical here. We've got 40 VCs on the platform. We're an investor match partner with Seed Legals. We work with the leading CFO organizations, and we're beginning to generate a flywheel effect. Our business model, highly profitable, very low CAC, 95% margins, lifetime value £7,000 per customer. Next, it's defensible against AI. I believe that the value of knowledge is coming down the curve to virtually nothing. The value of software is coming down the curve to virtually nothing because my AI can copy your AI. So what's the future about? It's about complex relationships, partnerships, deep integrations with the VCs, the CFO organizations, and the building of community, which is where Startup to Stand Up comes in. It's not really about knowledge and software. And lastly, we know how to make money for our shareholders, and that's why you should become one of them with us. So that would be my pitch. So 10 minutes, I've got it timing pretty much right. Questions, observations from everybody?
I've got one observation. I do, as you know, lots of introductions between founders and potential investors, be it angels or VCs. I've had 3 calls with founders this week where they've said that they got they're budgeting for, well, it was one in particular, 250 to 300k for tech development. And I say to them, do you know what's going on in the real world at the moment? And we had this article that Harry shared with us where a guy out in Silicon Valley is saying that AI is maturing to such a point now where it can build a very, very good app within 4 hours. So it's almost rendering a lot of tech development redundant. Are you seeing the same sort of thing, Mark, where the cost of knowledge, cost of software is very, very low and coming down the tube to a point of zero?
I think there are 2 things. Firstly, I was involved, as you've heard, heavily in the .com boom, which changed the world. And the AI boom is happening 10 times as fast. The but is, as with the .com boom, there's a gap between what the technology can deliver on the leading edge and the adoption of that technology by companies. And it takes, in the .com boom, it probably took 10 years post the boom in 2000 for most companies to take full advantage of the internet. And I think we're seeing the same thing with AI. Yes, a lot of us are on the leading edge of the development, but the adoption by the average SME is going to be much slower than that. In terms of development, I have no doubt that the AI will just replicate itself and enable you to build lots of stuff really inexpensively. At the moment, though, there is quite a lot of the AI is tending to be where the state of the technology is. It can build stuff. It can build reasonably simple stuff reasonably quickly, but it's difficult to put the guardrails in, and it's difficult to put. Um, it still can't do a lot of the more complex things. And if you are a business that can build an app in 4 hours, somebody else is going to come along with a similar business and build it in 2 hours. You've got no defensibility. So you have to think about how am I going to make myself uh, competitive against businesses that can build software quickly. And to my mind, it comes back to my point about relationships. Your business has to build relationships because the AI can't easily disrupt the relationships. Uh, I don't know what you think to that.
Good answer. I think that's a great answer, Mark. Um, Something else I've been thinking about is AI's effects, and you mentioned it this morning. Communities like Startup to Stand Up, other CEO peer-to-peer business groups. Do you feel that with where we're going with AI, these type of communities are going to get stronger because people are going to crave human intervention?
Yes, the answer to that is yes. Having been a part of your community only for a couple of months, it's become evident that as people do more from home in these startups, in these early stage businesses, people uh, it can be lonely. And I think one of the fantastic functions of what you are doing, I think there are two. Firstly, you are creating a sense of community, and secondly, um, you are that networking element is really it remains important. The AI can't do the networking, and so I think community is going to increase in importance. And that we had this GeoCities business that I was involved in 1998, where we were the second most visited site on the web, full stop, after Yahoo in 1998. And that was all about creating communities of people who wanted to build websites. We gave them the tools to build their own websites, and we put them deliberately in like-minded communities. You literally came onto the site and decided where on the site you wanted to have your website. You could choose your neighbors. When you arrived, your neighbors would come and help you set up your website. And we had moderators. And the moderators, we had a disproportionate number of people who were differently abled, who were in very remote communities. And that connected them. So I think we're going to see more and more of that as AI scarily takes over our world.
Thanks, Mark. Mark, you got a question for Mark this morning?
Yeah, thanks, Ollie. Super insightful, Mark. I really enjoyed the initial chat there. So a bit of context to start. So I am looking to raise funding at the moment. We have a live product. We're in revenue. We're doing something with what I would say is genuine AI and a genuine kind of 10x opportunity versus incumbents. Just a bit of context in terms of who I am, what I'm doing. The problem I have is really around, I suppose, positioning for certain types of investors, and I guess like a mismatch or potential disagreement as to how much commercial information should go into that initial pitch. And to expand on that, I spoke with a friend the other day. He's done very well. He was head of engineering at a company that got acquired by Miro. He's now just finished his postdoc at Stanford, and he's just raised, circa £2 million for a pre-seed round, right? Real high flyer, very technical. The paradox is when he looks at my pre-seed deck, he almost thinks less commercial information should go in there versus somebody who wants to raise 250K, right? Which is me. I want to do a SEIS angel round. I want to have, a real focus on profitability and on an exit path. So the question really becomes around, when I'm looking at a pre-seed round, SCIS, what's the level of information that should go in with respect to, commercial information about financials? Because I see like a real mismatch in the market here with respect to what some investors believe should go in a deck at that point, what some founders believe should go in a pitch at that point. For example, my friend Marek, who did the Stanford chap, he's very much like go bold, big vision, don't worry too much about numbers, right? And then other people are very much like focus on numbers, show us you have a path to exit, show us you have concrete financials, et cetera, et cetera. So what would you say? I guess it depends, right? On like
no, well, there are two rules to it. The first is whatever step you've got to think about your progress as a business as a ladder, and whatever step you are on, people will always go, I'm not really interested in that step. I want you to be on the next step. And you go, well, I can't get to the next step unless you give me some money. And so I would suggest that firstly, what is the purpose of the pitch deck? It is not to close the investment. It is it's not to educate the investor. It is to get the investor's interest. That is with only one, with only one objective. If I put money into you, how quickly are you going to give it to me back, and on what multiple? That's the only thing that I really care about with that first pitch deck. Do I think you're going to make me money? And then we can go on. If you've then caught my attention, because maybe I've looked at 50 other pitch decks, then we can have a conversation where I'll start saying to you, well, show me the financials, show me this, show me that. But I don't think, and this has changed. 30 years ago, 20 years ago, you used to have to write a 100-page business plan. It's all now, everybody's attention span has got shorter, but it's actually caused a problem for investors because they got 50 bright young people with 50 great-looking pitch decks. You've got no way of knowing what's behind it, which is actually what the purpose of diligence is, which is we give you some, we organize you so that you do have more behind you. But I would I would keep it simple. I wouldn't worry about the commercial sensitivity of what you've got by and large, because the VCs aren't going to copy it. I used to be worried about that sort of thing. I'm much less worried now. In the end, if you've got something that's defensible, showing the bare bones of it to somebody is not going to cause them to be able to go off and do it. I don't know.
And do you see anything from a commercial perspective that's typically left out of decks to the detriment of the founder? I'm a product person by trade, so when I look at my deck, whilst I have market size and whilst I show business model, there's maybe an element of like, hey, here's how much money you could actually make out of this opportunity. That's not within the deck. That's kind of presume that I would talk through that on a call. Is there anything that you think
that's the number one thing I'm really interested in. The other thing, by and large with pitch decks, the average VC might spend 3 minutes on it.
Mm-hmm.
Nobody wants to read vast amounts of text. So
of course. My deck is definitely not text heavy.
But if you look at, Ollie will know this from attending loads of pitch events. Most pitch events, people run out of time still talking about what their company does. So it's keep the pitch deck really simple. Most of us can only, in my case, because I'm a bit older, remember much less than you, but most people can only remember 2 or 3 points having read a pitch deck. So you've got to look at your pitch deck and go, what are the 3 things I want the reader to walk away with? There's no point in giving me 50 bits of information. So I would keep it simple. I wouldn't worry too much about disclosing stuff. That would be my advice. But talk to me afterwards. Come and have a chat.
Yeah, I would love to. Yeah, no, happy to check out the Zensphere and it maybe in exchange for a pitch deck or something. But I'll let someone else.
I think I can make any introductions, Mark. If you want an introduction, thanks for your questions, Mark T. And I can make an introduction to Mark B for you. Just let me know.
Thank you.
We have
Appreciate
got a
that.
couple of good questions, Mark, in the chat.
Right.
But I think we'll deal first with Nav and then switch to Neil, if that's okay.
Right.
Thank you, Mark. Lovely. I really like that. I love the pitch as well because I come from a sales and revenue background, so I go to events and I sometimes think people exactly what you said. They're going too much into detail. I'm like, you're not selling the benefits. So I love that pitch for a start and a lot of the advice you gave. And that's what I wanted to tap into because what we do is we provide for basically businesses looking to scale up, looking to develop their revenue engine. Right, that means developing their playbooks, their processes, their sales strategy, and aligning it to the GTM, their go to market. Right. What I'm really looking for is to actually target VC funds and who are working with maybe Series A, B, and onwards, and PE companies. Right. And this is
Yeah.
a question for you, tapping into your vast knowledge of it's a bit that defensibility and that USP, because what would your advice be as the best way to tap into those funds, P or VC? Because a lot of the time they'll have this thing, well, a lot of what you're offering we can do in-house, and also just how you stand out in a very crowded market. It might be a longer answer, but just any kind of quick tips or ideas you think actually that's what you should lead on, that'll be really useful.
How to reach your target VC audience who've got portfolio companies who can
Yeah.
utilize your.
So I'll be targeting both the portfolio, but I also want to go at the fund level and target them directly.
It's difficult. I, I'll have a chat with you afterwards, and we'll talk
Okay.
about it in more detail. Reaching these people, the VC community is a difficult community, partly because there's quite a lot of arrogance there,
Right.
and actually getting. I don't know whether you agree with that, Ollie, but it's actually quite difficult to get behind it to persuade people that actually they could do with your help because they tend to think they know, perhaps in some cases, more than they actually do.
Okay. Well, I'll connect with you afterwards. I'll
Yeah,
connect with you on LinkedIn now and
absolutely.
we can have a chat. Thank you then.
Thanks,
Okay.
Navin. Neil.
Hi, Mark. Lovely to see you again. Thank you.
Yeah.
I'm still to make an introduction to you, actually. Didn't have that meeting, but it is scheduled for next week. I think one of the things as a founder, and to answer the question of why you need the money, is when
Yeah.
your clarity has come to where it is, that you as a business have shown the resilience, you've shown the bootstrap, you've done all of these things that tick from an investor's point of view that you mean and you really want to scale it and you don't necessarily have the complete skill set amongst yourselves to do it. But actually, I think it is to prove succinctly that your margins are improving, your community is growing, your repeat customers are coming back to you, and then it is replicable across different verticals within whatever sector that you're doing. Because at this stage, and I say this to everyone here, you don't know us. What do we need to prove to you? And as you said, it takes longer. And there are things, there's the unknown unknowns and the bits that you think that's going to happen that don't. And I just think it's that dogged determination, excuse my French, but fuck it, let's do it.
I think for the others on the call, Neil and I have spoken offline, and what was memorable about Neil talking to me about his business was I think you were a really good example of explaining the engine. You explained, you described your business to me in terms of an engine with inputs and outputs, and we were discussing what would happen if we could utilize more money to boost the inputs, because you've proved how that engine works, and you talked about the economics of the engine, and that's what you have to do. And on that call, and you spent just a few minutes explaining that, it came across as a business that was worthy of investment.
Thank you. I think the other thing is, as a founder, you have to be obsessed.
Yes.
You have to be obsessed, right? You have to say there is this determination that you've spotted the problem. And I said to you, Mark, before, my favorite book is Uri Levine, who The Inventive Ways. Focus on the problem. That is it. So thank you. We'll continue the conversation. Thank you.
Yeah.
I tell you, thanks, Neil. So many founders, as Mark alluded to, focus on what they do when they're talking to investors, and lots of stuff around TAM and all size of market and all of that, instead of telling them how quick they're going to make money and how to return on it. And it staggers me. You know, I've been at a number of events this year where that's happened.
So have I.
And
It's
you
so
get to the end of
frustrating.
it and you think, what is this guy selling or this girl selling? And why do they need investment? They're asking for, you know, £250,000 for tech development. I mean, that shouldn't be anywhere near that figure nowadays. So it's some really good questions, Mark, in the chat. I wouldn't mind
Yes.
jumping on a few.
Okay.
So we've got Wesley. Wesley had a .com business in 1994 that had 1 million monthly viewers. Wesley's also number 998 of BT Internet customers for online. How about that?
Yeah, I'm
there for you, Mark.
I'm ahead of you, Mark. I'm afraid. Way ahead of you, mate. I was sitting in the cafes with the chaps who's from Google and GoTo and all the Vista and Yahoo and
Does
all that bunch.
does some of what I've said resonate with you?
Yeah, I disagree on some of it. I'll be honest with you, but
Good.
that's you know, I disagree with it on a few things, but that's not. That's something for you and me to have.
Well,
a chat
let's
with.
connect afterwards, and I want to learn from you.
Yeah, but no, it's very interesting. My the way I see the just on the AI side of things, because obviously, as Ollie said, that you know I've got experience in the AI as the first generative AI business when I launched that one. I'm not involved with that now, but what is the biggest shock in I think, and is the concern is that genuinely there's only several major AI softwares out there. All the rest are piggybacking off of these softwares. And the problem with that is that, well, one, you have an operational issue, but it also clouds the market for anyone who's got genuine software that have developed themselves. And it's an interesting market. The growth is phenomenal. I mean, my AI was talking to Amazon's AI. We interconnected it at the time, and we literally came back one night, and the conversation that had gone on, we didn't even understand anymore what they were talking about, and we actually switched off the connection, and Amazon and I had to investigate what was going on. It is quite incredible, the technology advancements in AI, and I think what people don't realize is there's an awful lot that's not been shared with the public and the business world at the moment. There are massive growths in AI, but it doesn't threaten everyone. And the thing is taking it on board and really being excited about it and saying, well, what can I actually use? The trouble is that you've got 500, maybe 1,000 different companies now offering different versions of all doing the same thing, but you can probably just go to your simple ChatGPT, your Gemini or anything, or your Grok or whatever, and actually build your own version of that, which is not going to cost you hardly anything compared to the other companies. It's just having the will and understanding. So the best thing I would say to any company looking to have any AI integration into fundraising or anything is to sit down and to analyze what you want to get done and how to do it by each different. And if you're going to use outside platforms, what platforms do what, and what's the overlap, and where is their roadmap? That's the important thing. Find out that software's roadmap so that you can move forward. And when it comes to raising money, a lot of you know I've raised over 400 million in my career. The raising money side of things, I think roadmap is really important to the right investors. The hardest round you're ever going to raise is the business angel round. I will say that categorically. It is a blooming nightmare. And also, from the point of view even of our current company that I'm involved with, we're finding better money is easier to raise overseas than it is in the UK. The UK is really struggling for money, despite what you might read and see. And some people are very lucky and get investment, but I've found investment is a lot easier and a lot quicker from overseas. So don't lock yourself just to a UK investment area when you're looking for money, because I think you'll find you can actually go overseas and find it. And if you've got a good thing, like Mark said, if you've got a good thing that shows the return, then investors will follow it. But there is something I would say is that every investor seems to have a business angel investor has a different point of view and a different, they all think they know a different type of. There's not one perfect pitch deck. You cannot create a perfect pitch deck. You really cannot. I get people telling me how to create a pitch deck, and I've created so many, it just makes me laugh. I've been doing it for 40 years, and you can't create a perfect pitch deck. Mark, just so you know, I still have a business plan. I've got a 60+ page business plan, as well as about 5 different pitch decks, all the different scenarios.
And what I know from that is that you will have thought through a whole load of issues around your business in thinking through.
Yeah.
The business plan doesn't have a lot of value as a document. It does have a lot of value as a process for making you.
It's an operational document.
Confronting grey areas and really thinking through how you would approach various issues that if you just do the 10 slide deck, you don't bother to do. And those issues come back to bite you once you've raised the money.
I would say something actually for those that don't have a business plan and are thinking, well, where do I start? Because a lot of old people like me and Mark, excuse me for saying that, Mark, but a lot of us oldies, we kind of grew up and business plan was the document you had for doing a pitch deck and everything. Sorry, you didn't have a pitch deck, you had a business plan, and that was it. And all the financials. There is software out there. LivePlan used to be out of Palo Alto, I think it was. Palo Alto was the original software name. LivePlan, it's quite expensive initially, but the thing is, it's good for you to have to build a business on it. Once you've built your business plan, you can go on to just a $2 a month thing just to hold it there afterwards and just download it as a Word document. But I would suggest that you do that. It's a really good exercise to build that business plan because you actually see all the problems and it does build it out for you. So it's an old I've lost the word I want to say here, but it's not archaic, but basically it's an old software that's moved with the times and is now using AI to enhance it. But you should have a look. It's liveplan.com. I think you should have a look at that because it will be impressive for investors. Even business angels will look at that and knowing that you have that. And something else, Mark, that we do that might help others here is we actually have a investors portal that we've built on the back of our website. And we have that for shareholders to go to, and occasionally we open it up to investors. And that's really a great little thing. And it makes you look bigger and better, but it also allows the investor to go there willy-nilly to go into the.
No, I think that's a good idea. Before we finish, I think I should move on to some of the other questions.
Sorry, I'll move.
That's fine. Am I seeing differences in valuation of businesses based on AI-generated tech versus legacy approach? Short answer to that is yes, but I think we're going to see an AI crash, and the people who've got no real clothes will be found out. So I don't think the legacy approach is dead. What else have we got? Regulated businesses, long time to market. How do you sell this type of proposition to investors? The answer is it's really difficult. Really, really difficult, which is why medtech is a difficult area to get investment from. And that is an area where you do need to raise quite a lot of money because it will take long timeline will take even longer than you thought it would.
I think
sorry,
there's one. Sorry, if I can jump in there. I was just thinking that although there is a regulatory process which is there for good reasons, all that sort of protecting users from bad outcomes, what it is doing during that sort of regulatory period is really sort of establishing the robustness of a product once it's there. So
yes.
It's sort of like it's a formal opening of a door, which if you don't have that regulatory process, you'll live or die by the success or otherwise of the consumer facing market. So there could be some ways of maybe emphasizing that money going in is probably going to build quite a lot of revenue. It's a bit difficult to know how much ROI and when. But it's, if you do get that far, you've got something substantial which probably isn't just going to evaporate.
No, that's absolutely correct. Are there any other questions from anybody? Or should we bring this to a close? Ollie?
I think we've exhausted most of the questions, Mark, and a big thank you to you and everyone on the call today in attendance. Is there any final questions for a short, very, very short question for Mark before we depart?
But if any, I believe that Diligencia can help most of you, most of your businesses at whatever stage they are at in getting organised. And I know Spencer's on the call, and Spencer's been kind enough to introduce me to a client opportunity, and we're beginning to see.
Also, Mark, you were very kind enough to open up Diligencia for me and go through different modules, and I found it excellent. I really did. And what did I say to you? I think it's something that should be maybe given to other businesses across the UK. It should be almost like a government directive or subsidy or whatever it is, because I think in every business in the UK having Diligencia, there will be less risk of failure.
Well, that's an amazing endorsement, and thank you very much.
No, that's how I feel. It gives you vision where your blind spots are, and every business owner in the world has got blind spots, Mark. So well done for building it.
Excellent. Well, thank you all very much for attending, and we'll see you on these startup stand-up calls in due course.
Yeah.